What's going on here? Let's see. Get this out of the way. And this out of the way. Okay, all right. You guys notice the airline stocks today? You know, all gapped up, or it didn't gap up, but they move really nicely. If you just got to pay attention. That's all there is to it. See? So yeah, seemed like they're in a lull, not doing much, but why is the technical picture higher than the price, and the price is being squeezed down to the bottom? Something's wrong with that picture, right? And that's the way it goes. That is an opportunity, but you didn't need that. Yeah, the Dow Industrial Average moved up nicely today, and one of the major indexes. And the Russell 2000, of course, even moved about twice as much as a percentage as the Dow Industrials, and it has options that expire today. The S&P 500 and the QQQs just made marginal advances today, so not really looking the part that we want to see. But notice the Russell 2000 also, like the daily chart on the Dow, showing an advance. Why is the price still kind of hovering near the same level and the technicals start advancing? So that's what we're looking for. And let's see here, SPY, kind of the same picture, still advancing. It's but not nearly, not even close to the percentage gain on the Russell 2000. Notice the Russell 2000 was, I'll show you again, about 3.5% today. That's good. And of course, if you're looking at the leveraged indexes, you're looking at the TNA, which is 3 times multiple. So if you want to take advantage of that without using options, that's a pretty substantial return, over 10% in one day. And URTY, what? URTY, same thing. It's a nice advance there, just in case. And let's see, we're looking at the SPY. Didn't have, can't really tell, from a 15-minute, 5-minute, I don't know. Doesn't stand out in a strong manner. QQQ stands out a little bit more strongly than the SPY, so a little bit of advance from 215 on to about 245. So that was a little bit of a picture there, but doesn't rival the Russell 2000. That a nice picture here. 5-minute chart has almost a perfect double bottom and upside divergence, pretty significant. And let's see, along with combined forces of the daily chart and stuff like that. It's nice. Nice, nice. I've been trying to tell you lately, when the charts allow for it, that the Russell 2000 has been trying to make an advance. So something was in the making there if you'd been paying attention to all three indexes, right? And so the Russell 2000, see, for the options that expired today, funny how that was 4 cents just a short time ago. 4 cents. Now $10. That's uh, I don't know if I got this right. See, now my math skills. I see, that can't be right, you know. That's about 250 times your money. So that's if you believe in the charts. See, so that was somewhere like over here when it was first advancing. So you got to pay attention to these kind of things like this if you really want to take advantage of something that has some potential. It's something that's building in it. So why was the technical picture getting stronger and stronger, stronger, and the price wasn't moving? See, that's what we're trying to figure out. Uh, and and that right there is the one thing that will lead to a really nice gain. So even if you didn't take advantage of all that, then you could have taken advantage of today's opportunities, maybe. But you missed out on some of the returns. 223, like they were about 6 cents this morning, and they ended at a close to $1.85. So that was about 30 something times your money, over 3,000%. And if you bought them right at the close yesterday or near the close, 4 cents to $1.85, that's 45, 50 times your money. Makes a big difference. And the 224s or the same 2 cents this morning, or the 3 cents this morning, about like they were yesterday at the close. And they moved from 3 cents to 85 cents, almost 3,000%. So, or you could leverage your money, just just not have to worry about any options or expirations or anything like that, and just buy it and hold it. Right. So, 10% return is pretty good considering it's a major index and it is only just during the course of one day. That's pretty sizable. You don't have to worry about any expirations or anything like that. But you can see that there's quite a difference between even the leveraged move of only 10% and what options can do. Even options bought late. See, it gapped up today, and notice that the was like the TNA gapped up, and the Russell 2000 gapped up. But the 223, 224 calls were still the same price that they were at the close yesterday, even after the big gap up. So if you're paying attention and if you're gutsy and if you're willing and able to push the button and buy options that are way under 10 cents, then have we got something in store for you? That's the way it is. So 30 or 40 times your money, that's slightly more than 10% return. That's 30, 40, 50, 60, 80 times your money in one day. So who is not willing to risk their money, their $1,000 or whatever it is, just this one time? Or how many times have I pointed this out? How many opportunities have there been like this just over the course of the last week or two? I seem to recall some 45, 50 times your money. I think that's been on 4 or 5 separate occasions over the last week or week and a half. Correct me if I'm wrong. I think that's right though. 40 or 50 times your money. So you see what you have an opportunity to do. You can either trade the things that you can be in and out during the course of one day, or the things that last a little bit longer because you have some momentum that is building in the Russell 2000 that allowed for something that was a little bit longer in duration. So I try to focus on the things that make the biggest returns, the greatest returns in the shortest possible time, so that you don't have to waste too much of your energy and your time on something, just be in and out of it. And go on about your day and go sailing or go golfing or do whatever you want to do. But 30 times your money is far greater than 10%. Let's see, that would be 300 times greater than the leveraged indexes moved. So not my choice. I know where I'd want to go. But it depends on your time. Do you have time to look at the things and pay attention to what's going on, or you just want to take advantage of something that's going to leverage your money, somewhat? So make a 10% return. So you got $500,000 you put in there, and you made 10%, that's $50,000. That's pretty good return, I guess. But you have $500,000 at risk. The whole thing's at risk. And the variations can come and go. So as they do, like with NVIDIA, how it's done, So I think I'd just rather make the 3 or 4 or 5, 6,000%, and you put $1,000 in, you make 30 or 40 or 50, $60,000, and you're done. So the next time you have plenty of money, you don't have just 10% return on your money. If you invested $50,000 and made 30 or 40 times your money on that, good grief. Let me see. You're talking about a heap of money there. My calculator doesn't even go that high, I don't think. But so you $500,000 that you were going to invest in the leverage index. Would have been at 30 times your money during the day today. That would have been $15 million. One trade, one time. And we'll see you in the trading games, and you don't have to worry about anything the rest of your life. Just like that. So I keep asking you guys, is it worth it? So $100, $1,000. I say start with a minimum of $1,000, because $1,000 could turn you into something good. $30,000 quickly. $40,000, $50,000 quickly. So in the last 2 weeks, you don't even want to multiply that, because I guarantee you my calculator will start smoking then. And that is not just something that's made up. That's the truth. That's the way it has been for the last week or two, and that's the way it continues. So this is one of the best trading times that you could ever want, because 30 times, 40 times, 50 times, 30 times, 40 times, that's what we're talking about. We're talking about $1,000 times 50 times 50. That right there, just 2 trades on $1,000 you initially start with. 2 trades making 50 times 50. That is $2.5 million. Don't do it again. Times 50 equals 125. Excuse me, $125 million. And that's 3 trades. Throwing the odd 30 times your money. And you're not a millionaire anymore. You're a billionaire. Just like that. Nobody knows who you are or where you came from, but you're a billionaire. And they don't have to know where you came from. They don't have to know anything about you. Just mind your own business and show people that it can be done. How's that sound? Sound like something you can wrap your head around or your money around? Because I keep telling you, the only thing you're investing is initial $1,000. And after that, you don't have any money out of your pocket at all, at all. Right? Zero. So it's not like you do when most people invest. So they, oh, I lost some money, I made some money, I made some money, I lost some money, lost, made. Well, and then you're only talking a few percent, like 5%, 10%, you know. What are we dealing with such small numbers for? Don't you believe in the capabilities of what options do? And I have narrowed this down as much as is humanly possible because you don't want to narrow it down anymore than to have the 3 or 4 major indexes. That's all you ever need, because nobody from the SEC is going to come down knocking on your door and say, hey, how'd you make that $50 million? Oh, well, pull up a chair, I'll show you. Yep. Sounds good to us. They'd say, carry on. Okay. I'm paying my taxes on, right? Oh, $50 million or, it's a lot of tax money. If everybody would learn to do what we do here, we'd have the national debt paid off in no time. See, that's what we're lacking is people that want to leverage their money and pay the taxes in and cover the national debt. Then bring interest rates down to 0 or, like they do in the countries that don't have any debt, like the United Arab Emirates or Qatar and Kuwait and the places where the oil-rich countries are, and the Norway, South Korea, Liechtenstein, Switzerland, places that don't have the concerns that we have about national debt. Just keeps piling up. Well, nothing could pile up faster than 1,000 or 2,000 and 3,000% in a day, or a few hours is what I'm talking about. And there's no amount of debt. No way. You figure it out yourself. If you had, $1 million of debt and you didn't have but $1,000 to your name, well, you've got a pretty sizable debt to income ratio or debt to assets ratio. But if you leverage the $1,000, the only $1,000 you have left, could you pay off the $1 million and then be way, way, way ahead? That's all we're talking about. Just break it down to an individual person. Yeah, we overspent. That's true. Well, the higher time frames would be like this. Like the daily chart you're looking at. See, like that's pretty nice. So you've got the choice of making your money just leveraging your money, like with the TNA or what the leverage indexes, TNA or UTRY, that's the good way to make some money. So like the Russell 2000 has gone from 198 to 225. So that's whatever return that is. What's TNA? TNA has gone from 34 to 49. So that is, I don't know, 20%. Let's see, a 34 plus 34 plus 20% equals, no, that's more than 20%. Well, as a long-term thing. That's what I'm saying. Let's see. Let's see. 34 times 30% equals. No, it's more than 30%. 34, right? At the bottom times 40% equals. Thirty times. Yep. Just that return. And it's only been since like really it could have bought them anywhere over here. Anywhere with the price is just flattening, like it's still only over here, it's still only $34 and something, just for all practical purposes, it's still flatline. So that was just what, a week or so ago, 10 days or whatever it is ago, 11 days. And you could have made 40% return on your money. Every dime you put in there. If you put $500,000 in there all at once, then you'd have, bam, just like that. You got 40% more than your $500,000. What do you want to do? Do you believe it is the question. Do you believe in the capabilities? I have to show you after the fact because, you can't see something unless it's already produced. You won't believe it. See, but what you have to believe is, why does the technical pattern have such an advanced look to it? And see, like this, like, let's see, it's looking pretty good, wouldn't you say? And then, you go down the time frame. So why is this like this way here when the first one we were looking at, like the June 17th? Okay. Well, see, this is not what you'd want for options. I'm not suggesting this is a good options trade, or this, or really any of these really that are good for options trade. But as far as you keep staying with the program, I'll think, well, why is the technical pattern still advancing? And then it becomes a good options candidate, but regardless of that, if you even like over here, or even right here, it's only 35 and now it's 49. Well, that's, I don't know. Pull out my calculator again. 35 plus 40% equals, that's 40% from 35 right over here. See? To 49 something right there. That's 40% return on your money. Well, that's really good. That's substantial considering it's a major index, and that's only been in 11 days. How's that for your babysitting? Yeah. See, we're just talking about the major indexes and which ones have the most strength and, you know, the most identifiable patterns. You know, we're just looking for the same old pattern we always look for, double bottom, you know, or same, close to the same bottom, you know, and advancing technical picture. We've looked at this numerous times over the last several weeks. Well, why is the technical pattern still advancing? You know, well, it says there's going to be some kind of a pop somewhere. So, you know, looking at the 4-hour chart, strong, you know, the 30-minute chart, strong. See, this is the kind of thing right here in the near term that creates an opportunity for trading, for options, or for buying the leverage index, whatever you want to do. See, but whatever you're doing, you're taking it to another level, because you're talking about something that has gone, let's see here, like this is last December, and it has done nothing. The Russell 2000 has done absolutely nothing this year until now, until just the last couple of days. And it's finally broken out to where it's a positive. You see that? So it's done absolutely nothing. Although the Qs and the SPY and DIA, whatever, are all at a new high. The Russell 2000 is lagging far behind. This is nowhere close to its all-time high. Back in 2021, it's nowhere even close to that. Like the TNA was, it's only 49 now. It was a high of 114. It's got to go more than double what it already has. So that's substantial. So the SPY, it's way, way, way ahead of what it was back at that same time, 2021. See? And the Qs, they way ahead. See? And even the DIA, see, way ahead at the beginning of 2022. It's substantially ahead. The only one that's behind is the Russell 2000. It's behind by a wide margin. So you can see that it has some potential if you were paying attention to that fact and realizing that, hey, notice that last week or two that the Russell 2000, when it makes the gains, had gains that were substantially greater than the other indexes. Well, that is a sign that maybe the momentum is changing and the direction of the markets are changing. You know, see, like from the time it gapped up here, like on the 10th of the month, see, like it closed at well, let's see, on the 10th it closed at like around 203, and then it's already 210, 211 by the next day. See, and then so it gapped up there, gapped up here, and gapped up there. What do you think that is? Let me see here. Do you see any gaps in the SPY that are like that? Not unless you use a microscope, a magnifying glass. Do you see it on the QQQ? See, I change my glasses out here. Maybe I'm failing to see any substantial anything. See what I'm saying? See, so it's definitely hands down winner. No doubt about it. This is the same 30-minute chart, you know. Bam, 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 4 times. So these are not exhaustion gaps. These are gaps that are making up for lost time gaps. You see that? Well, it must be true because the other indexes didn't have that relevance to the pattern. The pretty clear pattern here, right? See, this is already higher. And then this is above the signal line. Then the advance started. Bam, bam, bam. You know, yeah, that's where you want to be. And this is only just last few days. This only the 16th. This is only last week, last Wednesday or Thursday or whatever it is, you know, and it's made that advance since then. Very strong, clear move. So you either want to be, you know, I trade options, so I don't know, you know, that it's hard for me to advocate buying the leverage index and stuff like that, you know, because it's such a paltry percentage when you want to take advantage of the absolute powerful, unbelievably powerful returns that options present. You know, you do not want to be involved in something that only produces 40%, you know. I don't think so. So you're talking about here like 200, she's I don't know, it's really say oh boy, it just goes to show what power can do. See, on the 10th of the month, when the first inklings of the divergence were present, combining that, of course, with higher time frames, and you know, you're seeing the substantial nature of what is happening. Yeah, those options were only 2 cents. Today, they're $4.90. That's 200, almost 200, and that's 245 times your money. Would it be worth it to invest in something like that? So if you were babysitting, let's say, and you had your time all taken up, well, it only takes a split second to make a decision to buy options on it. So you put $1,000 in there, and that $1,000 is now, you explain this to me, $245,000 explain why I would not have any interest in buying the TNA or anything like that, when I could buy the options on the index and make 245 times your money, not 40%. Turn $1,000, the only $1,000 you have invested. Remember, that's all you have left because you owe $1 million in debt or whatever. So $1,000 into $250,000. But you've got to realize that you've got to know something about what is going on. Well, I don't know. Let's see. Why did the price this time not go anywhere near the technical lows and stay this much higher? And then start to strengthen. You see what I'm saying? It's a subtle thing that happens, but you can maybe imagine that if before the, like hurricanes we have down here in Florida have a lot. People make a run on the grocery store and Sam's Club and Costco and everything. They buy up all the toilet paper, paper towels, and water, right? Well, this is somebody who watches what's going on and say, well, I see some patterns in the development that have me concerned. So I am going to be proactive and I'm going to go down to Sam's Club or Costco when nobody else is around, and I'm going to buy a couple of things of toilet paper, a couple of things of paper towels, and a couple cases of water or whatever it is. And I'll just walk out and nobody will know. You see what I mean? So that's what this is like. See, do you understand that this is what's coming? This is a storm that's coming. It's going to blow you away. And I'm talking about in a big way. So, and do you have to buy options under 10 cents? Yeah. Let's see, that was last week. And you still bought options under 10 cents. See what I'm saying? Because the 2 cent options are $4.90 now. Excuse me? Yeah, that's right. Now, wouldn't that make your babysitting experience a little more comfortable to have 400 and 245 times your money? Well, that's just that strike price, so there's more than that, but you have to realize any potential that exists in things. So 215, like I looked at like 215, they were only 4 cents, and that's the same thing, and it's only like say 214. I don't know what. Yeah, but yeah, just trying to and get the things that come up there, but that's all right. Just understand that the magnitude of what's happening here is something that's been in the making for a little while. It's like, well, why is it that this index, unlike the other two indexes, see, it's a nice bottoming pattern at approximately the same price, but the technical picture, this is a long-term chart, see, is advancing. Now, why is that? You don't see that on the Russell or the SPY. Where's that? Where's that pattern? You don't see a pattern like that. Right? Qs. Where's the pattern? I don't see a pattern on that in the Qs. It's nowhere in sight. This is the 1st of July. And I don't see anything at all. And on this time frame, so why do I need to change time frames? I don't, because I see what I want to see on the Russell 2000. Is that okay? So I don't need to really look around. If you find what you want, then stick with it. I don't know. But it would only take this class one time, starting each person put $1,000 in there and turn it into $250,000, and you'd be set. And then we get on to something. Then the next time you say, oh, how much guys want to put in here? 5,000, 10,000. See, it's not costing you anything then. The guy's always worried about, the 500 or $1,000. Oh, that's a lot of money. Blah, 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 blah. Yeah. No, it's not a lot of money. I'll guarantee you that. It seems like a lot of money if you lose. Well, that's true. $1,000 you lose. Oh, then lost it again. Yep, lost it again. Lost it again. Lost it again. Lost it again. Let's see. Well, why would you lose it over and over and over again? Seems to me like you're not paying attention to what you're doing, right? You're just taking a chance, like some other people I've watched, that they just want to be in the action. Well, what do you mean be in the action? You've seen from the classes I've done, I don't have to be in the action, not unless the action is favorable. See? So I would look at something like the Russell or the QQQ or the SPY, and I'm looking for a pattern. I don't know where the pattern is. Like this is a pretty decent pattern, just the other day. And then this one here had a decent downside pattern. Okay, had a double top. Was this yesterday? Or a new high, and a downside divergence. Well, that's pretty significant, So I could maybe see myself clear to make a trade on that. See, if you do have the time to watch, same thing here. The technical picture is much lower. The price is much higher. Well, definitely a divergence, right? You see that kind of thing present here? No, you don't see it. A strong, clear downside pattern, so it's maybe a somewhat weak, but I certainly wouldn't take a put trade on the Russell 2000 when it's gapped up 4 separate times, or like today makes it 4 separate times. It gapped up every single day, just about. Something is up with that. Well, so that is definitely not something you want to buy put options on. Call options, yes. Put option, no. Like you don't have to watch any of these things very much. You just watch until you see a pattern, then you buy it, and then you could sell when you have any kind of a profit. Like on the Russell 2000, I mean, geez, it it'd probably be instantaneous. You know, you put $1,000 in, and 5 seconds later, literally 5 seconds later, you can sell them and have double, triple, 10 times your money or whatever it is, and put some back. So you never have anything at all invested the rest of the time. See, I don't understand what everybody is doing all the time when I hear from people that, well, I lost money, or a couple of people asked me today, what's wrong with their chart? So they didn't see the same thing I saw. What do you mean you didn't see the same thing I saw? Like with the SPY or the Russell tooth or the like this. Who does not see that pattern? Who does not have that exact same chart on their 10-minute chart on their programs or whatever they're using? If you don't, there's something wrong with your chart. It's not mine. It's yours. And both of them said it was something to do with, well, like they were using Thinkorswim. I said, check your thing and see if you have the thing set up for extended hours trading. Well, does that make a difference? Well, if you don't have the same chart pattern I have, then obviously it makes a difference. See, I mean, I don't invent the charts. I just want what I want. Like I remember I used to try to people used to wonder, well, why don't you try to tweak the indicators? Why would I want to try to tweak the indicators? The indicator does fine on its own merit, just like it is. See, like it's got a downside divergence. Yep, I didn't tweak the indicator. I didn't tweak the price. I didn't tweak anything. It is what it is. See, if everybody just get over the semantics of these things and start realizing that your charts need to look exactly like mine, or else you don't have the opportunity to trade. That's it. And I don't care whether you use candlesticks or whatever it's got the same kind of information. Like I change this stuff I hear, like like got the same information, same exact stuff. What difference does it make? Just more confusing, more stuff to look at, but you know, then kind of an engulfing downside, right? Well, I could have told you that without looking at the candlesticks. See, because it's a downside divergence. Something's going to engulf it and it's going to take it down. There are a lot of big downside patterns here. See, like, right? See, that's the way it goes. See, like with this one over here, what the price is higher and the technicals are lower. Well, then it starts to roll. Well, there you go. Look at the candlesticks. They're big, wide, brutal candlesticks, Well, like this with the upside. Well, bam, 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 bam. See, like this goes up. So what do you want to know? But I don't need to have candlesticks to tell me that. I want less information, not more. More stuff to confuse you or to try to think through. I don't want to think through anything. You see what I'm saying? I do not want to think, think, think through anything. I want to see what I want to see and know that it has merit the way it stands, and it's going to create an opportunity, and the price is going to move dramatically, dramatically, dramatically. Yeah. And that's just been in the last couple of days. So I don't know. You'll make 10% return on your money, 40% return on your money, 24,000, 25,000% return on your money. That's 250 times your money, isn't it? 25,000%, not 10%. Say, well, I don't have any interest in. I just do it. I just say for the benefit of some of you guys that say you don't have time. Well, if you don't have time, you don't want to do anything. I mean, you want to make some money. I guess you can make some money doing this, but it's not like what we're talking about. 250 times. You get that through your heads. Times your money. I don't make the numbers up. That's just the facts. You know, you invest $1,000, you have $250,000 as we speak. You invested $4,000, you're a millionaire, just like that. And it only cost you $4,000. Is it worth the risk? Let's see, especially when you could sell out and you say you put $4,000 in there and you sell out initially when the price jumps from the 2 cents where the options were, it jumps up to 5 or 6 cents or something like that. You decide to sell the thing plus more. So you got your 4,000 plus 8,000. So and then you let the rest of it run. Doesn't cost you a dime to make $250,000. Won't cost you a red cent. So the people's arguments that they use and they explain, I just sit here and just twiddle my thumbs, you know, and they're explaining to me, yeah, all the risk, and okay, I see what you're saying, you know. Yeah. So yeah, yeah, you're telling me. Oh, yeah, you're telling me about the risk. You want me to wake up? Oh, okay. What was that again about the risk? Yeah, you bore me. Bore me. There is no risk. In spite of the fact that this is the world's most powerful investment tool, I guarantee you, by far, it is the world's most powerful. Where else have you seen in the last couple of days from the 10th to the 16th where you made 250 times your money on the major index? Where? Show me one place that even came even a fraction of that. That you're very simple. Only thing you have to do is just watch what's going on and understand the merits of what's going on. Why are the patterns developing? See, the Russell 2000 was the only one that was hovering near the low. You see what I'm saying? Why is that? What is wrong with that picture? Like on the daily chart. Why is it that this price over here is still hovering at essentially the same low, hasn't broken out or anything like that? Something's going to go. So, and the other indexes are confused. All they're up, down, up, down. So unless you look at the low time frame, there is no opportunity. But there is opportunity here. See? And if you would just let something like this go traditionally, right? But not when it's one of the 3 or 4 major indexes. You don't let it go. Get rid of this. Oh, that's more like it. Too confusing with those candlesticks. I just want to see a divergence. I don't want to see any candlesticks interfering with it. So this is the Jets index, the airline index. So now, why is it? See, same thing. Why is the technical bottom? This is on the 11th. Why is the technical bottom higher? And see, it just manifested itself today. So this is the 16th, and these do not have options like the indexes do that expire every day, but it evolves. See, so you can feel good about it. In its development. See, how's American looks okay. United. Let's see which one looks the best. Delta. We'll get the lower time frames in a minute. Just look to the upper time frames. You see what I'm saying? Alaska Airlines. So I'm going to look. Well, wait. Start with higher time frame. Now, don't see any divergence on the daily chart. So it only takes a second to go through the charts and say, wait a minute, why is this technical picture the same here? And the price is much lower. This is on the 11th. The price was $35 and now it's 40. Why? See that? Okay, so DAL. See, we got higher time frames. See, so why does a technical picture come down and stabilize, and the price is still wavering around? Because that it takes the price a while. The price has to kind of get to a point where it's done the sell off and it's stabilized and it hem haws around, and all the time that it's hem hawing around, it's gaining some technical composure. See, so why is that? Why is it gaining technical composure? You know, I'm just saying, you know, gold index, why is it that it had, this is last month, right? But the daily chart, it's lost downside momentum. Oh, why is it? See, because this is higher, 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 higher. Price is the same or lower. See, so that is the element that we're looking for. We're looking to compress the price, but not the technical picture. We want it to be advanced like it is here. GTX. See? Well, you have to pay attention to the higher time frames if you expect to garner anything from this. Say the price, when you say, well, doesn't matter what you say or not, here the price low is 32.89 right here, and right over here is only 33.59. Well, that's only just marginally higher, right? But you see the technical picture, it's way, way higher and above the signal line. That's all I'm saying. MicroStrategy, or the other day, last week or whatever, it was only $1,200 and something a share. That looks like 1,600 and something right there to me, right? $400, just like that. Yeah, that's right. See, but see, it's gaining composure. Say, if you look at the long-term chart, you don't really see necessarily what's going on, but you do in the short term. But you don't need to mess with any of these things anyway. It's just information. Just focus on the major indexes. These are stocks or like Bitcoin that made some major moves and stuff like that lately. Okay, well, great. But why would you have any interest in it? Unless it has like technical elements that is sharply higher. Okay. See, this doesn't have any options on it, right? So, but you're still looking for the same thing, no matter what ticker symbol you're looking at, an individual stock, goals or sectors or whatever it is, you're looking for the same elements to be true. It's just that it makes it so much easier to trade the three major indexes that have options that expire every single day. And you're limited on what you have to look at. So the Russell 2000 options since the 11th or whatever, and that's only in less than a week, right, have made 250 times your money. Where are you going to make that? On the golds or Bitcoin or where? Excuse me. I'm failing to see it. It just doesn't ring true. Focus on the major indexes and the power that resides in those, and then you will see, by taking a risk just one time, I'm just begging you guys, just one time, take a risk, and then you will not be sorry. But the kind of thing some of you guys take a risk, and I've heard, I don't know what you're doing, because it doesn't have the things that I'm talking about in it. So doesn't show the price being about the same and the technicals advancing. I don't know what you're looking at. So, but this one here, it is, like I say, like today. So even after it's gapped up 1, 2, 3, and today makes it 4 times, even after the gap up, right? After 4 gaps up in price, after, mind you, no, not before, but after. could you not have bought the options at the same price this morning as they were yesterday, even after the gap up? Well, this is what the options say right here. So I assume that it's correct. Right? And that's 10 times or 11 times your money. It's 1,000%. Even after the gap up. So, all right. Anybody got any questions? Just stay focused. Just stay focused on the major indexes. And it still appears that the Russell 2000 has got momentum. It's had momentum for the last week. And it's, I don't know. But if you were to think back that, well, I wish I'd gotten if you'd gotten the options last week, they were out of the money, under 10 cents or like that, 2 cents, 3 cents, 4 cents, a nickel or whatever, you would not be an unhappy person right now. I'm saying that it'd be like, Romeo and his babysitting, right? So what is it that prevents you from doing the right thing? Because once you say, "Oh, the thing I paid 2 cents for is now 50 cents," oh, you think, "Well, that's pretty good." Not as good as $10, is it? Because you see these options, they can just make major, major, major headway and put you on the path to prosperity very quickly if you use a little brain power, just a little, not a whole lot, but a little. Even today, if you're not taking advantage of any of the stuff before and just taking advantage today, then you make 1,000%. So if you made 1,000% again, it'll be 10 times 10. That's 100 times your money. That's 10,000%, right? Then 10 times that is 100,000%, right? That's 1,000 times your money without ever making any big gains, just small incremental gains. Okay. So just remember, either small, slow and steady, or, I don't know, I try to take advantage of it. So you have to be focused, you have to be attentive, you have to be paying attention. Can't have distractions. Okay. All right. So I'll talk to you guys later on, and have a good night, and don't get impatient. Impatience does not pay. Patience pays. Impatience does not pay. Not if you expect to compound your money. That's what we're all about. Compounding. Get past the first one. Make a good one, and not 40% return. I'm talking about making big money. Okay. Talk to you later. Have a nice night and good rest of the week.